Hello again. So last lesson we had just done the ordinary share capital. I don't want to make the video too long. It was already 20 minutes. So now we're going to do the rest of our ledgers. So retained income, what you're going to do right now is put in your opening balance, which is 737,100. 737,100. That's our opening balance. First of March 2020. Okay. Then remember we had the buyback. So the thing is with the buyback, we bought this shares back for, let's say we are the company, we bought the shares back for 6 Rand 20, which is 620 cents. So just divided that by 100. So we bought them back for 6 Rand 20, and 410 was just for us to, 410 cents went to ordinary share capital. We deducted that from our ordinary share capital. So the rest we will deduct where? From our retained income. So that is where we're gonna deduct the full price for the shares. Part of it from ordinary share capital and part of it from our retained income. So that is what we're derecognizing. So we'll just take the 4 and 10, it's the 6 Rand 20 minus the 4 and 10 cents, and that will give you how much you're going to be deducting from our retained income, and that is 2 Rand 10. So how many shares are we buying back? 120,000. So that will be 120,000 multiplied by 2 Rand 10. The reason why we recognize the 2 Rand 10 in our retained income is to show sort of like, okay, it's like when you buy an asset, you're buying back an asset, it's valued at 492,000, and now you're actually buying back at higher than that because it's valued at 6 Rand. It's valued at 4 and 10 cents per share, but you're buying it back at 6 Rand 10. So you see there's a loss there. You're losing out because you're buying it at higher than the actual value, what you actually value it as. So that's why we're gonna deduct the loss from our retained income. It's not a loss as you would have it on your profit and loss statement or your statement of comprehensive income, but it is a type of loss. So that's why we're doing this. So 120,000 times 2 Rand 10 equals 252,000, and that's our loss. Okay, this buyback happened on the 30th of November 2020. Sorry about the noise. Then for now we'll stop with retained income because the rest of the stuff that we're gonna put here will be the appropriation account balance, as closing off the appropriation account. Not the balance, but as closing the appropriation account. So let's go to the rest. We have the SARS income tax. We had a credit balance of 8,500. So let's start with that. I think I'm gonna leave the dates out for now because it's taking way too long for me to write down. But it's important that you have your dates, especially if they say that in the required. So 8,500. That was in the beginning of the year. And then we were told we paid that back on the 5th of March. The amount due to SARS was paid via EFT. So bank 8,500. Opposite side. What else happened? Provisional income tax was paid to SARS in 2 equal installments on the 1st of September 2020 and the 24th of February 2021. So they didn't give us to us, but what they did give to us is the closing balance, which is 5,000, and it's a debit balance, and we can actually also calculate what? Income tax. So let's start calculating income tax first. Your income tax increases the amount you owe to SARS, so we record that on the credit side. So let's calculate that. We told 30%, and this is net profit before tax, so that will be 1,475,000 times 30%, we should give you 442,500. Remember, net profit before tax times the 30%. It will be different if it was net profit after tax. And we know the closing balance is a debit balance of 5,000. So the 5,000 is next year's opening balance. So that means it's here for now. And this is to record the provisional payments. So on the debit side we have 8.5, and on the credit side we have 8,500 plus 442,500 plus 5,000. That gives us a total of 456,000. So that will be our total, 456. $456,000. Then total both sides. And let's find the balancing figures. So it's gonna be 456,000 minus 8,500, and that should give you 447,500. And then we divide it by 2 because we're told the provisional payments are equal installments, and that should give you 223,750. Okay. 223,750. These are balances. And that is it. You're done with your SARS income tax, and you can take your income tax to the appropriation account, and you will take it to the appropriation account on the debit side. So how much was it? 442,500. Appropriation account is basically where we take our profit for the year, profit and loss for the year, and we subtract all the things that decrease our profit, and then we'll be left with our retained income for the year, and that is where we're gonna take it to retained income account. So we were given our profit for the year, net profit before tax, it's 1,475,000. So that goes on the credit side of your appropriation account. Profit and loss, $1,475,000. Okay, that's our profit and loss. And now we have to cover our ordinary share dividends. So what has happened in terms of dividends? We had an interim dividend of 25 cents per share for our shareholders, and the new shareholders do not qualify. So this is before the new shareholders, which were 400,000 shares. So this interim dividends just for the 600,000 shares. Then the final dividend is us subtracting the 120,000 shares from the 1 million shares that were in issue before the buyback. Okay, let's do all of that. Where am I going? Okay. The interim dividends were paid, so bank, and the final dividends were just declared, so those are called shareholders for dividends, if you remember. Shareholders. Okay, I'm just gonna abbreviate it. Just remember, it's shareholders for dividends. Okay, let's go back again. It's 25 cents for 600,000 shares. 0.25 times 600,000 shares. That should give you 150,000. And for our final, we have the 1 million shares. Minus the 120,000. Then you multiply this by 42 cents, which is the same as 0.42 rands. So a million minus 120,000 shares gives you 880,000 shares. Then multiply that by 42 cents. It will give you 369,600. 369,600. Three 69600. Okay, so that's gonna be 150,000 plus 369,600. That will total up to 519,600. Let me just check something out. Okay. That is what will be going to your appropriation account. Okay, my pen is giving me a lot of problems. Sorry about that. 590,600. Okay, and that would be under ordinary share dividends on your debit side in appropriation account. The details will be ordinary share dividends. Okay, and I think I'm just gonna abbreviate that: ordinary share dividends. And how much are they? 519,600. Now let's calculate totals. So on a credit side we have 1,475,000. Now debit side we have the income tax but plus the ordinary share dividends. So that's 442,500 plus 519,600. That should give you a total of 962,100, which is less than the 1,475,000. So we're just gonna have the 1,475,000 as our total. Okay, then after that we can calculate how much will be going to the appropriation account on the credit side. Sorry, the retained account, retained income on account. Okay, got a bit too excited there. Retained income. Okay. Remember, you're not allowed to write abbreviations. I am. So 1,475,000 minus your income tax and your ordinary share dividends. That should give you 512,900. 512,900. Going straight to your retained income amount. 512,900. Again, make sure you have the details as appropriation account, and your date will be the end of the year basically. Okay. Then we total up. So it's the 512,900 plus the 737,100. That gives you a total of 1,250,000. On this side we have 252,000. So our total is the 1,250,000. Totals are equal, so 1,250,000 then we find the balance, which is 1,250,000 minus the 252,000 to give you 998,000 as your balance. Make sure you carry it down. Now it's been brought forward. And that's how you do your ledgers for companies. So it's ordinary share, retained income, SARS income tax, ordinary share dividends, and your appropriation account. So it does get harder. This is the simplest it can go. It does get harder with certain adjustments that they can use, or sometimes they don't give you these amounts, they give you other amounts, so you have to calculate. Sometimes they'll give you your provisional tax payments, and then you'd have to calculate your balance for SARS income tax. So it just switches up which thing will be asked, but as long as you follow how to fill it in, start with your balances and what happens during the year, and then calculate balances, you won't have any problem at all. So as long as you have it down and how it happens, you are covered. Remember to calculate your average price, and yeah, I think that's the best advice I can give you on how to calculate this. Sometimes they will give you the net profit after tax, so you need to know what the percentage of income tax is, and you will have to reverse calculate your net profit before tax using your net profit after tax. So these are all the things that you should be aware of. So this is when math comes into play. So yeah, that's all. See you next lesson.